you have 10 million bucks, that's kind of the threshold. Now, that's from the perspective of a billionaire. You can have anything in the world, any sort of private jet, anything you want. What do you consider rich?
Kevin O'Leary said he keeps $5 million in cash
At all times.
because a lot of people are talking now that we're in a debt bubble. The only reason the market's going up is because interest rates have been going down. We've been printing a ton of money. How long could this be sustainable for?
What if Bitcoin doesn't work?
I have a friend who's selling his business, and he's probably going to sell it for like low 8 figures.
Okay.
He wants to take all of that money, all of it, and put it in Bitcoin. He already owns a lot of Bitcoin. He's made a lot of money in Bitcoin. And I told him, I'm like, realistically, I feel like, I mean, I don't have this amount of money, but I feel like life doesn't change that much after like 4 to 5 to 6 million. And like, you should probably focus on capital preservation. If you're going to take a massive risk, do it with money over $10 million or something like that. And he's like, yeah, but I still want to put it in Bitcoin. What would you say is the optimal amount of money to have? Is it 4, 5, 6 million? After what point does it really start to like degrade?
Well, we have a client who is really good friends with a billionaire, and he was out having
some adult beverages,
drinks with this billionaire, and he said, "Hey, man, you've had so much success. You sold your company last year for like $900 million. What's rich? Like what? I mean, here you can have anything in the world, any sort of private jet, anything you want. What do you consider rich?" And he said, honestly, 10 million bucks. Because once you have 10 million bucks in the bank, even if you're not very good at managing and you just make 5% on that, it's $500,000 a year you can make every year. And it's kind of hard to spend $500,000 a year if you're debt free, right? So if you have 10 million bucks, that's kind of the threshold. Now, that's from the perspective of a billionaire. I think most folks, if you have a couple $1 million invested, a lot of people just don't have lifestyles that are that big, right? So if you have $4 million, $5 million, there's a pretty good chance you're going to be financially independent in most parts of this country and most lifestyles. Now, for your guy, I don't think it's as much about capital preservation, or maybe it's a flavor of that. It's more about diversification.
It's concentration risk.
What if Bitcoin doesn't work? What if something happens and there's some shift and all the hype doesn't pan out, and you had all of your net worth tied up in that, not just a couple millions of dollars you already own, but the couple of million plus the 10 million. You've already won the game. Or if you haven't won the game, you've rounded third and you're coming close to home plate. Do you really need to start showboating between third and home, or is the risk just not worth it? Why not diversify across real estate assets or income producing securities or a diversified portfolio, or just have money sitting in a high yield money, whatever that thing may be for you? Putting it all in Bitcoin is betting all of your wad on this one outcome that if it doesn't happen, why? Why take that risk?
Before I went out on my own, I worked at another firm, and we worked with a lot of Lucent technology executives. And a lot of people probably don't even remember what Lucent was, but Lucent was the high flyer of the 90s. I mean, if you go and look it up, it was a Fortune 500.
NVIDIA.
I mean, it was you couldn't lose with this investment. And I've unfortunately dealt with executives who have won the game, but because they were overly concentrated, they've watched that wealth turn to pretty much nothing. And that's what I would ask your friend is, have you thought about, because some of this is systemic risk you have for going back to poor. Why, if you've won the game, is it a responsible thing to even leave that risk sitting out there? Is that at a minimum, carve off what you would need for a safe withdrawal rate to keep that diversified and safe, or even liquid. I mean, if you don't like traditional investments, that might even be something you want to consider just keeping liquid. That would be a better play, because I think he's not thinking about the emotional toll it would take to go from winning the game and having tremendous success and taking it down to zero. That would destroy you.
Kevin O'Leary said on the Diary of a CEO podcast that he keeps $5 million in cash
at all times.
I don't think that's the craziest thing.
And that's it.
And
he said he doesn't touch it, but that mentally for him, that no matter what happens,
if everything
I got this
went to
cash.
pot, that's my, and I think,
always,
and even if you're not a billionaire, I think a lot of us can. It's why we tell even retirees who are in financial independence and they're living off of their assets. If you can just keep like 18 to 24 months of your living expense in liquid cash, what you've done is you've given yourself a 24-month runway that no matter what the economy throws, no matter if there's a global pandemic, a real estate crash, tariffs, stuff in the Eurozone, whatever that is, you've given yourself enough time that you can give your portfolio time to recover. You can weather that storm if you have that cash there. It's the same sort of idea, just on a smaller scale. So again, I think throwing it all in Bitcoin is just, that's insane.
I think at Kevin's level, that's probably just a nice safety net for him for peace of mind. But I will tell, and I cover this in Millionaire Mission too, is that I think excess cash, now don't mishear me, for anybody who's just starting a journey, just get the steps 1 and 4, which is basically an emergency reserves, and that once you get in the Roth and everything else. But I think once you reach a certain level of success, right around step 8, there's nothing wrong with having extra cash, because cash can be a tremendous wealth builder too. Because if you keep some excess cash, what happens when everybody else is out of cash? Think about every time we've had a collapse or a market downturn, because people cut it so thin. And most people are not walking around with the right type of emergency reserves. They're not, protecting their levered assets right. So as soon as the oxygen leaves the room, meaning cash, people all of a sudden, that's when the deals are out there. How did we get this building that we're filming this in? Was right after the pandemic. The owner was second guessing because he had gotten an offer the previous year, and he was like, "Man, I should have sold it." And we were able to come in, and now it looks like the deal of a lifetime. But it's because there was enough fear in the marketplace that cash, if we didn't have it, we wouldn't have been able to do the deal. And that's what a lot of people will look at success and think it was luck. But I'm telling you, it really is that intersection of opportunity and preparation. And sometimes cash, you can buy assets that you never thought possible because nobody else has cash.
Do you think we're going to have another instance like that in the near future? Because a lot of people are talking now that we're in a debt bubble. The only reason the market's going up is because interest rates have been going down. We've been printing a ton of money. How long could this be sustainable for?
I'm willing to say I don't know, but I'm willing to say it's happened enough in my lifetime that yes, it will happen again. Because I also, like I detailed already earlier, I have a buddy, we bought Apple in the Great Recession, only a few $1,000 that in his portfolio, he never sold it. It's worth close to $500,000 now. And so we always see when markets get detached from value, there's tremendous opportunity to make money. And that's going to happen. I don't know if it's going to be in real estate. I don't know if it's in the stock market, but having dry powder money after you've kind of won the game and other things can be very rewarding.
But where do you tell people who say, the market's too high right now, I shouldn't be investing because I'm going to wait for an opportunity like that?
That's scary, especially if they have no financial foundation.
Well, and because you don't know when it's going to happen, right? I mean, we know that every decade there's about 2 downturns roughly, but we do know that as we sit here in 2025 right now, we just had a major bear market in 2022 where the market was down. So we just came through a pretty big correction, and that was the longest correction that we've seen since the Great Recession. So 2008, early 2009, market was down. Pretty solid run there. I mean, yeah, we had fourth quarter of 2018 bear market. We had COVID, but it was like a very quick blip. And then we saw 2022, which was a down year. We're only a few years removed from that. So yeah, there will certainly be another downturn. But if you look at the layout, and First Trust has an amazing illustration on this that shows from the 1950s all the way till now, and every bear market and every bull market that we've seen. And it shows how severe the bear market is relative to how robust the bull market is. And it shows the tenure of the bear market, which on average is like 11 months, relative to the tenure of the bull market, which is like 4 years. And it doesn't even compare. It's not even close. And so what you don't recognize is that more money is likely lost trying to avoid the next downturn than if you were to actually just participate in the next downturn and stay through it and just kind of drive through it. And I think a lot of people who sit on the sidelines, they wait and they wait and they wait and they wait. And finally, right when things feel good, right when they finally say, okay, now I have an extreme level of confidence. Market just hit a new all-time high. Now I'm going to go to work. And then they invest. And then the downturn happens.